Indian equities ended the year 2020 on a positive note. Both the Nifty as well as the Nifty Bank surged more than 5% each during the month of December. Not only that, but the Nifty also managed to close out the year with a gain of about 15%. That was courtesy relentless buying that we saw from the foreign institutional investors. So the FIs purchased Indian equities worth more than $20 billion during the last year and clocked their highest yearly purchase since 2012. So extremely good year for the Indian equities, especially given the fact how we had tumbled about 40% during the first half of the year and hit that low of 7511 on the Nifty. Which also brings me to the point, how have analysts revised their target prices during the last month of the last year. Let's have a look at that as well. So what we did was filter out all the stocks in India that are tracked by a minimum of 10 analysts, and the universe comprises of 280 such stocks. Now out of these 280 stocks, more than 80% of the stocks saw an upward revision in their target prices during the month of December, while you had 10% downgrades and 9% stocks actually were unchanged as far as their target price is concerned during the previous month. The sector revision picture, let's have a look at that as well. Extremely robust and encouraging because none of the sectors actually saw a downgrade in their target prices. It was led by the financial space, which has been performing rather well in the recent couple of months. 3.7% on an overall basis was the upward target price revision for the financial space, followed by industrials, which also saw an increase of 2.2%. And then you have the IT pack, real estate, along with communications, materials, as well as the healthcare pack, which witnessed an upgrade of more than 1% each as far as their target prices are concerned. Four sectors that saw target prices increase less than 1%. Those were the consumer discretionary, consumer staples, along with the utilities and the energy space. Now let's have a look at which are the stock upgrades and downgrades that analysts actually had on their radar during the previous month. Starting off with the stock upgrades, Steel Authority of India led the way with a massive increase of more than 45% during the previous month, and analysts to revise their target price upward to the tune of about 32%. Followed by Bank of India, 15% upgrade. From the large cap space, you had Vedanta and Tata Steel that saw an upgrade of about 14 to 13% each, and then you had from the aviation space SpiceJet, which witnessed a 12% increase in its target price. One Nifty company that featured in the list was Adani Ports, which also saw a 12% increase, as did JSW Steel along with JSPL and NMDC. So clearly you can see that the financials and the metals pack really is the flavor at the moment that analysts are anticipating to scale to higher levels. The last two stocks that were upgraded were Navin Fluorine, 10% upgrade, as well as Hindalco once again from the metals pack that saw a 10% increase. Now moving on to the stock downgrades, not much to talk about over here, but you did have the Mahindra CIE Automotive stock that was downgraded by 5%. Manappuram Finance 2% downgrade, and interestingly you had one Nifty name that features in this list, which is Wipro. Of course, just about 1% downgrade for that stock as far as target price is concerned, but one has to also take into fact that the massive rally that this stock has had, not only this one but the entire IT pack has been on a runaway rally. From the media space, you had Z Entertainment along with Sun TV, which also saw a mild downgrade of about 1 to 2%.